Welcome back, my financial freedom fighters. Is your favorite family member, Money Man Junior. Man, that never gets old to me, man. I really love coming on here, talking to you all, and just engaging with my family, man. You all are my family, my financial freedom fighters, my financial family members. I love you all. And if this video gives you any value, please hit the thumbs up. Send it to your son, send it to your daughter, send it to your mother, send it to your best friend, the people who you care about. Tell them hit a thumbs up so I can keep bringing you this great content about these questions that we all have and that we all might have had. Because I know, like me, some of you all probably wish you knew back then what you know now. And that's what that's why I create these videos, to inform people, for the people like myself, for the people like us who wish we knew back then what we know now. And if you want to engage with me on a weekly basis, I post on Instagram. You could go find me on there, financial_freedom_fighters. Join the family all around. All right, so today, what we're talking about is mortgage. So what's going on right now, the interest rates are very low and people are buying mortgages, buying homes, and people want to know about mortgage because sometimes you go get that pre-approval letter and you may not find a home that you're looking for next week, next month, or the month after. And so someone asked me, they say, hey, I'm looking for a home. Now, when I'm going to search for these homes, will this destroy my credit? Will it harm my credit? What will it do to my credit? Because I might not like the first home that I see, or I may get outbidded and this process may take long. So what will this do to me personally, to my personal credit score? So the simple response to that is, it's kind of an oxymoron because it's yes and no. All right. So when you go and get your mortgage and go apply for it, is some things you want to know. What you want to do is your research first. So whoever's supplying you with your mortgage, you want to research the company. Is it a well-known company? Is it a new company? You just want to know about where you're going. And why you do this research is because you want to see if it's a one-step finance institution. You're like, well, Melvin, what do you mean by a one-step finance? Well, what I mean is, imagine you going to, let's say, like a car dealership, and you want to get a car, right? And you don't have great credit. So what they do is they put your credit, your information into, boom, their funnel, right? And then once you go into their funnel, it shotguns effect, and they send it to multiple lenders. And what those multiple lenders do, they pull your information. So then now when you thought you had this one pull, now you got 10 pulls on your credit, checking out your credit score. So when you go to the mortgage, you want to make sure it's a one-step finance institution. So I like to tell people, check with your credit unions. Or if you have a good relationship with a bank, check with the bank. And why you want to do this is because you don't want multiple pulls on your credit report. And so then you'll get some people like, well, I was told that it's not going to affect my credit. You know, I have 45 days. I can get as many credit pulls that I want, and it won't harm my credit. So why does it matter if I go to a one-step financial institution? It matters because when you do this, I'm gonna give you a prime example. Let's say, okay, I'm searching for a mortgage. Now, let's say if I go to Pentagon Federal and I say, hey, I'd like to get a mortgage. Pentagon say, okay, well, your credit is good. You have an 847 credit score. So what we're going to do is we're going to give you this mortgage at a 2% rate. I say, cool. Boom. I'm locked in right there. I'm good. But now let's say I don't have a good credit score and I go to Pentagon Federal. They say, okay, well, we can work with you. You have a 640. We can give you 4%. And you be like, okay, that's cool. So people tell you shop around so you can get the best rates, which is good. You want to shop around. If your credit score is not that good, you're going to want to shop around because some people may give you a better rate than others. So then now you go to Navy Federal. You say, hey, Navy Federal, I want to get a mortgage. Navy Federal say, okay, well, your credit score ain't that good. We can give you 3.5, which is better than a 4. So then now you go to Bank of America, say, Bank of America, I want to get a credit. I want to get a mortgage for this new home that I'm looking at, whatever. So Bank of America say, okay, we're going to give you a 3. We just use the numbers. So now you got 3, 3.5, and 4. You went to 3 institutions. So now going to these 3 institutions, you want to make sure that you go to them within 45 days. So this didn't mean to say make purchase in 45 days. It meant to say get your credit pulls within 45 days. Why within 45 days? Because within those 45 days, when you get that credit pull, that initial credit pull, the other companies that pulls your credit, it will not reflect on your credit score. So in the beginning, when I say it's yes and it's no, will it affect your credit score? Now, let's say you get that initial credit pull like you got from Pentagon Federal. So once you get that initial credit pull, and let's say you go to 10 other credit companies to get a mortgage quote. So you got 10 plus that 1, that's 11. But within these 45 days, it's not going to affect your credit score. That only initial credit pull, which will affect your credit score. So when you use that mortgage, when you choose which one you want, have in mind which house you want to purchase. It's because after those 45 days, all 11 of those credit pulls will appear on your credit report. So then now when you go and get a new mortgage quote because you could not find the home that you wanted in the allotted time that credit institution that you went with them that they gave you, then now the new people who going to pull your credit going to see all 11 of those credit pulls. And that is going to affect your credit score. But your credit score will drop, but it will return. It will return because the only thing that is affecting is the credit inquiries on your credit report. So those many credit inquiries will drop your credit score drastically. Now, 1 or 2 credit inquiries will not play that much of a dramatic role in your credit score dropping. But people who want to shop around ridiculously with multiple credit vendors, it's going to knock you out. It's going to hit you, bow, bow. It's going to knock you out. You know what I'm saying? So it's going to harm you when you go to that other credit vendor who you didn't build up a relationship with. And you're like, yo, I'm trying to get a mortgage. They're going to say, cool. Pull your credit report. Hey, look, you got under 640. We can't do nothing with you. What you mean? You got 11 inquiries. Then it's going to take 2 years for them to get taken off. Unless you go through the route of trying to get them taken off crazily, whatever. But that's what's going to happen. So what you should do is, I tell people, just do business with people you know, meaning the institutions that you built up rapport with, who you have your account with now. You can check their best rates and the rates that they offer before getting a credit pull. So do that. See what they offer. You can honestly check all 11 and then compare them before you get your credit pull. And then know what type of home you want to get. Just know as much information as possible before you go through with this. Because, like I said, if you do not get your home within that amount of time that they give you to purchase a home, you will have to reapply for a mortgage. And your credit score will be lower than it was in the first place. So that's what you want to do. That's exactly what you want to do. And also remember, I preached this in past videos. I've said this plenty of times. Now, when you do get this mortgage, you're going to have that credit pull, and you're also going to have that credit history reduction. So a lot of people really don't care about this because their home is the biggest credit purchase that they'll make. But that's just a little food for thought. Your credit score will drop. And it's also depending on your credit portfolio too, because some people credit score will go up because it hits other categories in your credit portfolio that now reflects positively. So, but generally speaking, your credit score will drop, but it will return. If you have any questions or comments, definitely drop them down below. Look at the past videos. You know that I answer everything. I'm always on here looking out for my family because I got love for you all. And definitely follow me on IG also at financial_freedom_fighters_. Thank you, family. And always remember to think rich.